Okay, good question this, because it's an example of a current issues question where the examiner gets you to think about something in the exam. So let's have a look. What does she get us to think about here? Auditors should accept some of the blame when a company on which they've given an unmodified opinion fails. And they should also highlight more going concern problems when faced by a company. Discuss this. Okay, so discuss the fact that auditors are to blame a bit when a company fails, even though we've expressed an audit opinion. I think the first thing to say there is surely it's up to management to ensure they don't fail, to ensure that they have risk management procedures which will avoid going concern issues. That's definitely management's job, isn't it? However, because it is a discussion, maybe what the auditor should do is fully understand the business, and part of understanding the business is understanding the business risks, and so therefore should have an awareness of going concern problems. Whether they are to blame, though, I think blame is just a harsh word, isn't it, really? Another thing you can mention is sometimes that businesses fail, sometimes, due to unforeseen external happenings, matters, and it would be unfair to expect the auditor to foresee this. Something along those lines, I think, would be reasonable, and they should do more to highlight going concern problems. So should we do more to highlight going concern problems? Okay, well, actually I just thought of something else in terms of that other question. The first question, it's all about the expectations gap, isn't it, really? Blaming us that some people think it's the auditor's responsibility going concern. Obviously, going concern is management, not auditor responsibility. And management is the person that states everything is a going concern. But, again, maybe auditors could challenge management more on going concern. Anyway, that was just an extra I just thought of. Because we're talking here about warning about going concern. Could we do more to warn about it? Well, I think again you'd say, well, that's a management responsibility. Any fundamental uncertainties they should disclose correctly in the accounts. And in fact, the auditors do, don't they? We do warn about going concern because auditors will use the emphasis of matter paragraph when there is a fundamental uncertainty regarding going concern. So, we do have the emphasis of matter paragraph. And then the other thing, the only other way you can warn about it, I guess, is possibly use general meetings more, because that's how you can warn shareholders face to face, as it were. But again, maybe management wouldn't be very happy at a general meeting and you're there telling them all about how it's a going concern issue. But write that in, okay? Anyway, the point is that you have to think about these questions a little bit on the current issues, and that might be a good thing, Do we really want the whole exam to be, what did you learn in your textbook, apply it to the scenario? Sometimes it's good to think.